Fusion Mobile, quality e-learning experience on the go.
You're welcome to Fusion e-learning platform. Olokobi Pelumi by name, the account tutor. Now we'll be treating trial balance and balancing the ledger account. So the outline, we have the balancing the ledger account, we have the trial balance, use of trial balance, the nature of trial balance, and we're going to treat some illustrative questions. So let's start with the balancing the ledger account. As we've said in our previous classes, that the ledger account is one of the principal books, so it's the principal book rather, that contains the permanent record for all what? For all transactions. So before extracting the balance, so it is necessary and mandatory we balance our what? Our ledger's account. So while balancing the ledger account, the following rules should be applied. So the first rule is for us to add all of the items on the debit side of the ledger, also add all of the items on the credit side of the ledger. So you have to compare the both totals. So if the balance of the debit side or the total of the debit side is greater than the total of the credit side, we have a debit balance. While also if the total of the credit side is greater than the total of the debit side, we have a credit balance. So when you add the total of the debit side and the total of the credit side, the one that is greater, you have to find the difference of both. So the difference will be taken as balance carried down to the entries that have a lesser balance. So we have an illustration on balancing the ledger account. So we have the following is an extract from the books of Olusoji. He purchased goods on credit from Ayola. We have January, he purchased goods 5,000 naira, February 600, October 700. So payment by cash to supplier Ayola, we have January 1,600, February 300, October 380. So you are required to record the transactions and balance the account. So to record this, we can easily open Ayola account in the book of Olusoji. So Olusoji is with the one to maintain Ayola's account. So we can prepare Ayola's account. Okay, you can have the credits and debits. So there's the ledger account, the ledger account for Ayola, which is the personal account. So that is the personal ledger. So we have he purchased goods on credits. When the goods were being purchased on credits from Ayola, Ayola's account, personal account will be credited, while the purchase account will be what? Will be debited. So Ayola's account will be credited now with the goods, with the amount of goods purchased. So we have January, he purchased goods worth of 5,000 naira. So February, he purchased another goods worth of 600 naira. Okay, October, he purchased goods worth of 700 naira. So now payment by cash to supplier Ayola. So when Olusoji made payment to the supplier Ayola, we are going to have we are going to use the double entry principle. So we are going to credit the cash and debit Ayola's account. So at January, when Olusoji made cash payment to Ayola, cash account will be credited, while Ayola will be what? Debited. So this Ayola account. So we are going to write the corresponding account, which is the cash. So we have 1,600. So February also, when he made the cash payment, we have to what? Debit Ayola account with 300, and also we have October. We are going to do that also, cash with 380. So using the rules in balancing the account, the ledger account, the first thing we are going to do, we are going to find the total in this total of the what? Of the debit side. we have 1,600 plus 300 plus 380. Actually, it's 380. So the total of the debit side gave us 2,280, while also we have the total of the credit side. So we have 5,000 plus 600 plus 700. That gave us 6,300. Now the next thing, which is greater, so the credit side is greater than the what? Debit side. So we have to find the difference. 6,300 minus 2,280. So the difference will be here. So as let's say December, that will be balance carried down. When we have a closing balance, so we have a closing balance of 4,020 naira in Iola's account. So that is the amount of debt remaining in Iola's account. So we have 6,300. 6,300. So we can have our balance brought down. Maybe January in next accounting period, balance brought down. So we can then have 4,020 naira. So which means the account is having a what? A credit balance, because the credit entries is greater than the what? The debit entries. So we have an illustration. So he purchased goods on credit from Iola, that is suppliers. January 1, 5,000, February 600, and October 700. So since Iola is the supplier, so goods purchased on credit from Iola's personal account, which is the supplier, will be credited, and purchase account will be what? Will be debited in the ledger. So January 1, we are going to credit Iola account with the amount of goods purchased, which is 5,000 naira. Then also February, he purchased goods worth of 600, while also October he purchased goods worth of 700. So we also have payments by cash to the supplier Iola. So when the cash has been made to Iola's personal account will be what? We have to be debited, while the cash account will be credited. So we have January 1, Iola's personal account will be debited, which is this. So by writing cash, the corresponding account 1,600, while also we have the February. So Iola's cash personal account will be debited 300. So we have October, the personal account will be debited 380. So we have to balance the account now. So in balancing the account, we have to apply the rules. We have to find the total of the debit entries, which is 5,000 plus 600 plus 700, and that gave us 6,300. Also find the total of the debit entry. We have 1,600 plus 300 plus 380. That gave us 2,280. That means the total of the what? Of the credit entry is larger or greater than the total of the what? Of the debit entry. So we have to look for the difference, which is this difference. So that will be 6,300 minus 2,280. That gives us 4,020 naira. So that was about our balance carry down in the lesser entry, which is the debit entry. We inscribe that as balance carry down. It's 4,020 naira. So we have 6,300 to have a balance account. So you add this 6,300. So the next thing we are going to have our January 1. We can call that January 1. We can call this December, for instance. At the closing dates, we can have balance brought down. So balance brought down or brought forward. So we are going to have 4,020 naira. So that means the account is having a what? A credit balance, because the credit side is greater than the debit side. So we've done the balance in the ledger accounts, so we can then move to the trial balance. The trial balance. So once the ledger account has been balanced, so we can have the respective balance of all ledgers accounts, whether in the personal ledger, in the general ledger, or private ledger. So where we have their balances, so we can check the accuracy of the double entry in order to detect whether there is an indication of error or not. So we can prepare a special account to check if the principle of double entry is correctly entered in the book. So the list of balances of the ledger is what we now call the trial balance. So trial balance is the list of balances of the ledger. So it shows the total debit entry and the total credit entry, that is total debit entry and total credit entry of the trial balance. So when of the ledger rather. So when talking about the trial balance, so it is the list of all debit and credit balance of the ledger. So, and also we can also define the trial balance as a table, because it is a table or a schedule that shows the list of the debit and credit entry of the trial balance. So of the ledger, and such the debit entry and credit entry are generally extracted from the ledger in order to show the accuracy of the double entry. So we can then move to rules of the trial balance. This gone. The rules of the trial balance. Generally, making an entry into the trial balance has to follow some rules. So number one is that all assets in the book must be debited. Number two is all liabilities must be credited. Number three is all expenses must be debited, while also or loss also expenses or loss must be debited, while also income or gain must be credited in the book. That is the rules of the trial balance. So we can take this as this abbreviation as the rules of the trial balance also. This also works for the rules of the trial balance. The word PS, you can take this. The word PS can also work for the rules of the trial balance. The abbreviation. So we can take P as a purchase, E as expenses, A as assets, R as revenue or income, L as liabilities, and S as sales. So the first three must be debited. That is, they must have a debit entries, while the other three must also be credited. Have a credit entry. Must have a credit entry. So we can thereafter go to the uses of trial balance. Generally, trial balance is having two major usefulness. Number one is that trial balance is used to check the arithmetical accuracy of the ledgers, whether the principle of double entries have been fully entered. So we use the trial balance to check the arithmetical accuracy of the double entry principle. Also, the trial balance is used in the extraction of the trading profit and loss accounts. So that is the income statement and the balance sheets. So all of the items in the trial balance enables the organization to determine the profit or loss of the business. If we apply the rules of the trial balance, then we can just go to the nature of the trial balance. So trial balance having column for particular is debit and credits. So the list of balances of the ledger in the trial balance. So a table which shows debit and credit entry of the ledgers in order to test the arithmetical accuracy of the double entry principle. So we have for instance, we have the capital for the proprietor, and that always have a credit balance that comes to the credit side. We have all assets, all those come to the credit side. So we have the nature of the trial balance, so particular, the debit and the credits. So we have capital on the credit side, the credit balance, all assets must be debited, all liabilities must be credited, income should be credited, and expenses should be debited, purchases should be debited, while sales should be on the credit side. So capital, credit side, all assets, plant and machineries and the rest of it like this should be debited, while all liabilities should be credited, income should be credited, expenses should be debited, purchase should be debited, while also sales should be on the credit side. So we can move to illustrative questions. So we have an illustration question. Ojo Enterprises started business on January 1, 1991 with a capital of 16,000 naira. The following transactions were carried out during the month of January. January 1, we have purchased furniture by cash, 2,400 naira. 2. Purchased stationery, 200 naira cash, up to January 31. So we are required to write up the ledger account and recording the both transactions and extract a trial balance. So first thing we need to do, since majority of the transaction deals with cash, so we open a cash account. So let's at least manage the space. Account, then credit and debit. So we open a cash account. So we have we started business with a capital of 16,000 naira. Let's assume that amount is in form of cash. Let's assume the amount is in form of cash. So we have the debit cash, January 1, capital 16,000 naira. So again we have capital account, the ledger. So we have the credit capital account, January 1, cash 16,000 naira. That is double entry principle in there. So again, January 1, purchase furniture by cash, 2,400. So the double entry principle will be for us to debit furniture account and credit cash account. So we have January 1, we have furniture, we have 2,400. So we have to open a furniture account. So we have credit and debit. So we have the debit furniture account, January 1. So we have cash, 2,400. So January 2, purchase stationery by cash, okay, 200 naira cash. So that is cash payment, credit cash and debit stationery account. So January 2, we have to maintain a single column cash book since we don't have balance at bank. So we maintain a single column cash book. So January 2, so we have the credit cash, the stationery 200 and credit stationery and debit stationery account. Debit stationery account, January 2, cash 200. Thereafter we have purchase goods by cash. So we have January 3, then goods bought for sales, we goes to purchase account. So we credit cash account with the goods amount of goods purchased, 200 naira, and okay, 3,500. 3,500 naira. Then the next thing is for us to debit purchase account. So purchase account, so we have to debit that January 3 cash 3,500 naira. Then the next thing we have purchase goods on credit from NAGOGO 5,000 naira. So we have to open the first book of accounts we have to open there is our purchase day book. Thereafter we have to transfer to the ledger. But since we have only a single goods purchase on credit, you can transfer that directly into our ledger without us opening the purchase day book. All because of time, we can do that directly without us opening the purchase day book. So what are we going to open? We are going to debit the purchase account and credit the personal account of the supplier, that is NAGOGO. So purchase account will be debited. So we have purchase account. So we have January 4. We have NAGOGO. Now, so the goods worth of 5,000 naira. So NAGOGO personal accounts. Will they be credited? So we have January 4. So we have purchase. So we have 5,000 naira. So the next thing we have sold goods for cash. So when the goods are being sold for cash, that is the cash receipt. So again, what? Debit cash and credit sales account. So we debit cash 6,000 naira and credit sales account. Sales January 15. That is cash 6,000 naira. So the next thing we have sold goods to Charlotte Umedo on credit 2,400. So the first book of accounts we have to open is the sales day book in this transaction, but to avoid wasting of time, since we have only a single good sold on credit, we can directly transfer this transaction to the ledger by debiting the account of this customer and crediting the sales account. So we have January 15. We have Charles. So his account will be what? The sales account will be credited with the amount of sales, while Charlotte account will be what? Will be debited. So we have January 15. So we have sales. So we have 2,400. Then the next transaction we have January 18. Actually it was 18. We have 18. So January 20, paid advertisement expenses 200 naira cash. So we debit advertisement expenses account and credit cash account. So we have January 20. We have advertisements 200 naira. We have advertisement 200 naira. Then we have so to avoid confusion. So we have thereafter we have to debit advertisement account. So we have January 20. We have cash 200 naira. So the next thing we have January 25, paid Nagogo 3,500 naira cash, being part of settlement of goods purchased. So cash is being paid to Nagogo. So cash is the giving account and Nagogo account is the receiving account. So Nagogo account will be debited with the amount of cash. So we have January 25. We have cash 3,500 naira is being paid to him. His account will be debited. The supplier's account and cash account will be credited. So we have January 25. Cash account will then be credited with the amounts paid. So we have Nagogo corresponding account 3,500. So the next transaction, January 28. In January 28, we have paid rent in cash 300. So cash account will be credited with the amount of payment. Cash payment is credited in the cash book. So we have January 28. So we have rent. So we have 300. So do you have rent account? No. So we have to open the rent account. Rent account. So we have the rent account. So we have to debit the rent account. So January 28, cash 300. So the next transaction, paid salaries and wages 600 naira cash. So we have to what? Credit the cash 31, salaries and wages. We have 600 naira cash and debit salary and wages account. So we have salaries and wages account, then credit and debit. So we have January 31, we have cash 600. So we are done with the transaction. The next thing is to balance the ledger account, because for us to extract the trial balance, we will need to balance the ledger account. So we can easily balance the cash account, add all the entry on the debit side of the cash account. So we have 16,000 plus 6,000, that gives us 22,000. So add all the entry, 22,000. Add on all the entry on the debit side, we have 2,400 plus 200 plus 3,500 plus 200 plus 3,500 plus 300 plus 600, and that gave us 10,700. So these have a lesser balance, so we are going to have our balance carried down in here. So that will give us the differences. So the differences here will be 22,000 minus the credit balance, which is 10,700. That gives us 11,300. So we are going to add 22,000 as the balance. We are going to add 22,000 naira. So we have a debit balance here, which serves as the balance of cash, which is 11,300 as our balance brought down. So the cash account has been balanced. So we have a debit balance in this place. So we can also balance the capital account. Since it's a single account, there's nothing here. We can write balance carry down here. Balance carry down, how much? 16,000 naira. So we can close that and write balance brought down, 16,000 naira. So the next thing, we can also have balance the furniture account. Balance carry down 2,400. So we can balance that. So and balance brought down 2,400. Same thing, we can also have balance carry down in here in the stationery account. Since there is nothing here, 200. So we can have balance brought down 200. Again, we can balance the purchase account. and balance carried down. Nothing here. We can add this as 8,500. Then we have 8,500. Then we have 8,500. Then we can have balance brought down 8,500. So you can balance the purchase account. We have 3,500. Now we go account 3,000. We have 5,000 naira. This is greater. This is greater. We have balance carried down. The difference that gives us 1,500. We can balance now. That gives us 5,000. Then that gives us 5,000. So we have balance brought down. That gives us 1,500. So cash rent accounts too can be balanced. So to have balance carried down. So we have 300. So we close this. Balance brought down. We have 300. So again, we can balance the sales accounts and the balance carried down here. Add everything. We have 8,400. 8,400. 8,400. We can have balance brought down 8,400. So 8,400. So we can have balance carried down here 2,400 and 400, and balance brought down 2,400. So we can have balance carried down in here 200. The balance brought down 200. So in this place also we can add balance carried down 600. Then we can have balance brought down 600. So we have the balances of the ledger. So thereafter we can easily open the trial balance. So you can open the trial balance. So we have the debits and the credits. So we have particular. So we have the cash account. Cash. What is the balance of cash? That balance at debit side 11,300. So we have capital account. That gives us 16,000 at credit side. So we have furniture. That is the debit balance and assets. That will be 2,400. So we have sales. That gives us 8,400 have a credit balance. That will be given in the rule. So you have stationery. That gives us 200 having a debit balance. So we have purchase. So that will be 8,500 having a debit balance. So we have Charlotte. That's the debit balance 1,400. Thereafter we have Lagogo. So that have a credit balance 1,500. Thereafter we have advertisements. So that have a debit balance 200. So we also have rent accounts. That give us debit balance 300 and expenses account. We have salary and wages. So we have 600. So So we can there balance the account and then balance the account. So we have 11,300 plus 2,400 plus 200, 8,500 plus 2,400 plus 200 plus 300 plus 600. That gave us 25,900. So we have 15,000 plus 8,400 plus 1,500. So after we have 25,900. So we can see that the trial balance are having a balance entry. So the total of the debit side is equal to the total of the what? Of the credit side. That means in our ledgers, the balances of our ledgers are correct. So the principle of double entries has been accurately tested. That means there is no error in the trial balance. So we have a second illustration. The trial balance. So we have from the balance of Shego Enterprises, prepare the trial balance for the year 31st December 1992. So we have capital, funding expenses up to general expenses. So we have to prepare the trial balance from the details given. So I have to open the trial balance. We have the particular. So we have debit and credit. Have debit, have credit. So the first thing we have capital. Capital we have a credit balance which is 90,000. Sundry expenses, all expenses is debited in the general balance. So we have a debit balance 300. So we have bill receivable. So bill receivable is an asset, it's a current asset that will be debited 5,000 naira. So we have creditors. Expense itself is a liability, so that will be credited 10,000 naira. So we have returning inwards, that is the sales return. We have a debit balance 2,130. That is what return sales return. So we have return outward. That is a deduction from the purchases. So purchase return. So we have a credit balance 1250. The next thing we have furniture and fitting. Furniture and fittings. It's a fixed asset. It's a fixed asset that will have a debit balance. So 6-1, all assets should be debited. So we also have a freehold premises. Freehold premises or property rather. Freehold property is an asset also that will be on the debit side. So we have carriage outward. Carriage outward is an expenses that will be on the debit side. All our expenses should be debited. So we have bad debt. Bad debt also is an expenses. It should be on the debit side. We have cash, an asset, it should be on the debit side. Thereafter, we have bank overdrafts, withdrawing more than what you have in the bank. That becomes a liability to the business. So it's a current liability. It comes from the credit side. So we have purchases. Generally in Japan, the purchase is debited. So we have sales 250, that will be on the credit side. The next thing we have Drawings. Drawing is on the debit side. So we have discount received and income. An income account, that will be on the credit side. So we have discount allowed and expenses, and that will be on the debit side. Then we have provision for bad debts. For doubtful debts, still the same thing. So that will be on the credit side. So we have 730. So we have rent and expenses account. That will be on the debit side. So we have bill payable. Then that will be on the what? Credit side. Current liability. So amount payable. We have debtors. So explain itself. That will be on the debit side. We have carriage outward. Again, okay, that will be on the debit side and expenses. So we are having to carriage outward at the same time. Next thing we have accumulated depreciation. That is furniture. We have 150, that will be on the credit side. So we have advertising. That will be on the debit side. So this is 1,700. That is 150. Then we have general expenses. That will be on the debit side. So we can then balance it. Sorry, is carriage inward. Carriage inward. So we have carriage inward also. So that will also be on the debit side. So direct expenses. So we can add everything. So we have 300, 5,000. Plus 2130 plus 33,361 plus 40,000 plus 152 plus 68 plus 18,000 plus 171,000 plus 3260 plus 839 plus 156 plus 8,000 and plus 1110 plus 150 plus 160. So we have 283. So we have 283,786, and in this we have 9,000 plus 10,000 plus 1250 plus 7,000 plus 250,000 plus 254 730 3752 plus 1,700. So that gave us 283,686. So the test of arithmetic accuracy of the balance of the ledger. So we have a balance. So the total of the debit side is equal to the total of the credit side. So we are done with the illustration. So in this class we featured balances in ledger accounts. So which we said the ledger accounts we have to be balanced before the preparation of the trial balance. We talk about the trial balance, the nature of a trial balance, the usefulness of a trial balance, the rules of a trial balance, that all assets must be debited, all liabilities must be credited, all income or gain must be credited, and all expenses must be debited. Thereafter, you are given the abbreviation PS as P to be purchase, YE to be on expenses, YA to be assets, R to be revenue, L to be liabilities, YS to be sales. So the first three should be debited, while the next three should also be what? Should be credited. So if you are having confusion as regard to the topic, do not hesitate to replay the video for a better understanding. And again, some exercises will be displayed on your screen. Do well to attempt the question. Thank you.